What happens if the world splits into two blocks? That has ripple effects across the rest of the world. I want to make money, I want to compound my capital, and I want to win. But it wouldn't be so bad over the next 10 years if you just maintained your purchasing power in this debasement environment. We should stop complaining and start putting our energy on learning about the following few asset classes. There's gold, there's big tech, there's high yielding stocks, and there is Bitcoin. Actions that the government's taking is not because they hate us. It's not because they want to destroy us. They're not evil people sitting behind the desk saying, I'm going to screw the little guy. They're choosing these policies of debasement and inflation because... All right, what is up, guys? Welcome to another episode of Money, Markets, and Mayhem. This week, we're going to do something a little bit different. Rather than looking at charts, rather than looking at the technical, in-the-weeds things that we've been looking at the last couple of weeks, I'm going to get back to basics. I'm going to focus on mindset, and I'm going to focus on understanding the game that we are currently in. If you turn on the news, if you turn on a podcast, and I'll even put my hand up and put myself in this basket, you cannot help but escape that there are so many people out there that are pontificating and complaining about the way the system is. I had some feedback during the week and someone said, hey, the points that you're making are excellent. You sound smart. I'm like, yeah, thank you. But why do you complain so much? What the system is. Stop complaining about it. It's not going to change. Why don't you explain to people how they can be part of the system or front run the system? It's the old adage, if you can't beat them, join them. Focus on that. Put out a positive message and help people to understand the way that they can take advantage of the system and the way that the system is currently being set up. And so that's what we're going to talk about today. We're going to talk about the system. We're going to talk about why we're going down the path that we're going down, why governments are doing what they're doing. I mean, really, if you understand history, you could understand that the political leaders that are in charge today, Trump, Albo, all these leaders are just products of time in the generational cycle that we're currently in. We're going through a populist regime. We're going through a period, we're coming towards the end of a debt cycle. So we're coming up to a period where the debt has run up so big that the only options are either austerity, and we've spoken about that before. In the Western world, austerity is going to mean depression. It's going to mean you fail to get re-elected, and we'll talk a little bit about tariffs and the backflip that Trump's made on tariffs and why maybe he's done that. But that austerity, that taking a chainsaw to the economy like Milei has done, is a surefire way to lose the next election. It's not a way to win votes. So if austerity is out of the equation at this point in time, and the caveat that I'm going to make with this episode is everything that we talk about is on the proviso, on the bet that these governments in the Western world are not going to choose the austerity path because it's political suicide. So taking that into consideration, the currency debasement that we talk about so often, the inflation that we talk about so often, it's not emotional. It's not like the government of your country or the government of the country that you are in is out there trying to screw you intentionally. They're not evil people sitting behind the desk saying, I'm going to screw the little guy. No, that's not what's happening. They're choosing these policies of debasement and inflation because the mathematics behind where we are in history, the mathematics behind the debt suggests that this is the easiest path for them to choose. It is the path of least resistance, and it is the path that they're most likely to choose because it's the path that, even though it might cause some pain, it's the path that's going to cause the least amount of pain. So if we can try and understand what's happening from that lens, from that point of view, that the actions that the government's taking is not because they hate us, it's not because they want to destroy us, it's the path of least resistance to get us through this time, to get us through this period where all these things that I've discussed are culminating, and it's the easiest way to get society through with the least amount of pain. If we take that perspective, if we take that understanding, all of a sudden, instead of fighting what's going on, instead of being upset and demoralized by what's going on, we can play the game. We can front run the game. If we know the playbook, then we can front run the game. So today I'm going to attempt to take you through what that playbook to this game might look like. Okay? Now, what are we seeing at the moment? What are we seeing? We're seeing that every time the market panics in the US, every time it gets to a certain level, the Treasury Secretary or Trump or someone steps in and calms the markets through either liquidity, through comments. You've seen recently, Trump went out, tariffs on everyone, 145% on China, boom, 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 let's go. And the markets puked. The market level got to about 4.8, and all of a sudden you saw Trump walk it back with a 90-day pause. Why is he doing that? Why is he doing that? It's not that tariffs don't work. It's not that tariffs can't lead to the outcome that Trump wants. It's the fact that tariffs make you unelectable in the midterms. A year from now, in the midterm elections, if Trump keeps going on with this tariff path, he's not going to get elected. His Republican senators and congressmen down below have said to him, hey, mate, if you want us to go out there and pump your line and toe your party policies and do the things you want, implement tax cuts, you're going to need to ease up on these tariffs, because I can't push this through. I can't justify this to my constituents that their things are about to get more expensive. Their price is about to go up. I can't rationalize it. So you're going to have to pull back on that. So I think the worst case scenario for tariffs might be over. I think you're only going to see a de-escalation of tariffs. Now, Trump might talk a game, you might see more headlines, you might see these kind of things happening, but I think largely he can't play that card anymore. The Republicans to have a clean sweep in the midterm elections. Don't be fooled. This is not him backing down completely. The issue right now is capital. The issue right now is the deficit between the US mainly and China. So China, who export to the rest of the world, has $1 trillion account surplus over the USA. So that basically means that they export goods and they have an excess of $1 trillion in their bank account. Now, they have to do something with that. And what the Chinese government has been doing over the years is been taking that $1 trillion and buying US Treasury bonds, buying the NASDAQ, buying US assets. That's creating a deficit. If someone has a surplus, someone else has to have a deficit. And the US has had a deficit. They've had a $1 or $2 trillion deficit, which basically means they're exporting their dollar to the rest of the world. We're not going to go into detail, but it's hollowed out manufacturing. It's made jobs leave their shores. But what it's also doing now is putting US in a weak position with relation to the flow of capital and the flow of funds, because people are saying, hey, if you keep running up these deficits, we're not going to invest in bonds anymore. And the truth is, the US doesn't want the world investing in bonds anymore. So what they're trying to push towards, if you watch carefully, if you listen to the things that they're saying, they're trying to basically say, without saying it, because they don't want everyone to run for the exit straight away, hey, we don't want you to buy our bonds anymore. We don't want our treasury bonds to be the reserve asset. We still want the US dollar to be the reserve currency, but we don't want treasury bonds to be the reserve asset, because that's killing our economy. It's killing our Main Street, right? So that's the game at play, and that needs to be leveled out. And if they cannot level it out with tariffs, and it doesn't look like they're going to be able to level it out with tariffs, then they're going to move to capital controls. They're going to try and control the flow of money. And one of the main ways that they can control the flow of money is to put a user fee on foreign purchasers who choose to invest in the United States. That creates revenue for the US government, and that helps them to close that deficit. What they might then go and do, I think what Trump is angling to do, is to close that deficit, raise money through these capital controls, user fees, etc., and then try and lower taxes on the bottom 90% in America. He might try and eliminate income tax on the bottom 90%. And that helps him to adhere to his mandate, which is helping the lower half of the American population. So if all that is happening, if that is the game plan, if that is what is unfolding, that has ripple effects across the rest of the world. the ripple effects that has across the rest of the world is other countries, Europe, all the other countries that do trade, Japan, India, all these countries that trade with the US are gonna need to start doing the same thing. In a world that goes from globalization to more of an isolation policy or populist and isolation policies, it's going to mean that eventually, if bond yields start rising in these other countries, they haven't started yet. So you haven't seen the capital repatriation in big amounts because their bond yields haven't started rising. But if Europe's bond yields, if Australia's bond yields, if Japan's bond yields start rising, they're going to need to force capital to come home, which is going to put pressure on the US dollar. The US dollar will come down. And these countries are going to have to buy more currencies in their own country. And they're going to mandate their people to start buying more of their local bonds. So what does that do? That puts us in an environment where since 2008, the best place to invest has been the USA. You'll hear things like US exceptionalism. Yeah, the US has had the best companies in the world, and that's partially been the reason why money has flocked to the US, NASDAQ, Mag 7, etc. But it's also been because it's the safest place to store capital. Because as capital has gone into these assets, the US dollar has risen, right? Largely on the back of a lot of Chinese money that's been going in. But now we're moving towards a world where bond yields are going to start rising because everyone's cottoning on to the game that's happening. And eventually, if that happens in the US, if that happens in Japan, if it happens in Australia, if it happens in Europe, if bond yields start rising, citizens will be forced to sell their US assets and bring it back home. So where do we invest? Where do we invest in an environment where there could start being capital controls? I am still starting to get my head around this. What you have to understand is this is a monetary regime shift. These regime shifts happen every 30 to 40 years. If we go back to Bretton Woods after World War II, the guys got together in Bretton Woods, all the powerhouses of the world, and they said, this is the new system we're going to have. We're going to back the US dollar by gold. You'll be able to exchange your dollars for gold, and we will help refinance the rebuilding of the world post-war. In 1971, what happened in 1971? You may have heard that before. In 1971, the world started witnessing the US running these large deficits. Their deficits started to rise, and they said, well, hang on, we're not so sure that you're good for it anymore, so we're going to start giving you cash. You give us the fucking gold back. And it got to a point where so many people were demanding gold that the US had to say, no more gold standard. We're going to de-peg our dollar from the gold standard, and we're going to move to what was later termed a petrodollar system. So to cut a long story short, the US cut a deal with the Saudis, basically said, hey, we want you to price all your oil in US dollars. So all of a sudden, the rest of the world, if they wanted oil, needed US dollars to buy that oil. That became the petrodollar system. In 1994, that morphed into a kind of yuan petrodollar system, or yuan petro system, when China started accumulating more and more of the oil and commodities and resources in the world. And now that system has run its course, and the US has said, in exchange for them buying US Treasury bonds. So they would buy the US Treasury bonds, and then they would have the US Treasury bonds in their reserves. So if they needed to buy oil, then they had US dollars in their treasury in order to buy oil. Now the US is saying this system is over. And what you're seeing is the US try and push the world to a new system. So what does that mean? Well, it means that US Treasuries are no longer money good. The US doesn't want the US Treasury system to be the reserve treasury asset. It means that there's no longer certainty over the US stock markets. European stock markets could benefit, but we don't know what's going to happen. Chinese stock markets, maybe. We don't know. There's so much uncertainty. What happens if the world splits into two blocks? Who are you going to side with? If your money is in the wrong block and then you can't repatriate it, bring it home, you're kind of screwed, right? It could go low. So what are the things that we need to look out for? Well, before I talk about that, I want to quickly share two podcasts that I watched during the week that have basically got me onto this thinking and got me onto this talking point. And if you want to understand everything that I've just spoken about in 15 minutes, because I do not do it justice, but if you want to deep dive into these topics further and you don't want to just get a quick summary from ChatGPT, watch these two podcasts. Watch this one here, Investing During a Fourth Turning. This is a great podcast with Russell Napier. It's great. It's got a great title. You should read the book, The Fourth Turning, which was written back in the 90s and predicts a lot of what's unfolding at the moment. And then watch this one here, Print It Till It Breaks with Arthur Hayes on the Bankless podcast. And Arthur's got a great way of like dumbing things down into like layman's terms and helping us to understand it. And he talks about what the reaction functions are going to be in relation to this predicament that we find ourselves in. What do I think the playbook is? So based on all the research that I'm doing and based on history, where we should stop complaining and start putting our energy is on learning about the following few asset classes. I'm going to start with gold. So gold, and disclaimer, I just opened a position recently in gold. It's an options position, which means I'm betting that between now and January, the price of gold will go up. And that's a trade for me. I'll be in and out of that trade depending on how it performs. But let's start with gold. So gold is still the most trusted reserve asset. It's the asset that you've seen central banks been buying around the world. It has a 2,000-year history. And the reason that gold has gone up, if you go back and have a look, gold has actually outperformed the S&P from 2000 to now. I think gold has outperformed the S&P. I believe that with the world that we're going into, and again, this is not financial advice, do your own research. These are just some hack on the internet's thoughts based on the research that I'm doing. I believe that we're moving into a period of, say, the next 5 to 10 years when this fourth turning is going to unfold. There's going to be a lot of change, a lot of flux in the system. And I'm here playing to try and win. I want to make money, I want to compound my capital, and I want to win. But it wouldn't be so bad over the next 10 years if you just maintained your purchasing power in this debasement environment. Gold has the largest and longest proven track record of maintaining purchasing power. And I honestly believe that over the next 10 years, gold will probably outperform the US stock market, the S&P, for example. So there's gold. Another option that we have is tech or AI equities, so productive companies with pricing power. So think Microsoft. If the price of everything goes up, Microsoft isn't affected by supply chains. So when there's a tariff drama or there's headlines or there's a sell-off, Microsoft might go down with that sell-off, but it isn't affected by the supply chain issues. Its costs don't really go up. It sells software, right? So it has the ability to raise its prices in line with inflation. So if everything's going up, Microsoft pretty much is one of the companies with the biggest moats in the world. So you want to look for companies that have pricing power and have a moat around them that can still do well in what might be an inflationary environment and a currency debasement environment moving forward. Tesla, relative to all the fundamentals and all the like standard pricing models, people would say it's overpriced for a car company. It's probably true. Other people are saying that there's companies out there that are further along in robotics. May be true as well. But how many new electric car companies have been able to do what Tesla's been able to do? Not many. Why did the US lose the war in Ukraine? They lost the war, and US and NATO lost the war in Ukraine because Russia was able to outproduce them 4-1, artillery and ammunitions, etc. That's why they lost. So we're moving into a world where the ability and the expertise to be able to manufacture the most important things that society is going to need, especially when we move into a more multipolar world where we can no longer rely on China for all the best, most cost-effective goods. The companies that have the ability to manufacture will win. Will it be Tesla? Maybe. But what other companies out there are undervalued and are going to hold the keys for that manufacturing capacity in the future, in the world that we're going into? It's another place I would look. The next thing that I would consider is high yielding value stocks. So my biggest, largest position at the moment is an Australian company called Woodside Energy. It's Australia's largest gas and oil producer. It has some things going against it. It has some regulatory issues here in Australia. It has some oil and gas contracts priced with Asia that are quite low and aren't getting the full value for the resources at where they are today. But I think oil is it's at a fairly low level right now. So there's upside potential in oil, and this stock largely moves with oil. The world is going to need more gas and oil. There is already talk of, energy grids that are unstable, and to build the new green electric future or the sustainable future, you're going to need a hell of a lot more gas and oil. So there's that. There's the fact that the US dollar may fall against a lot of currencies. You've started to see, I think the Aussie dollar went to about 59 cents recently. And there's a lot of people out there from the US that think that because of our debt and because of our property markets, etc., the Aussie dollar is going to continue to fall. I'm not sure, right? I'm not sure about that. I'm not a currency expert, but I do believe that with this repatriation, with all this stuff that's happening, a lot of currencies are going to rise against US dollar. So there's an opportunity for our currency to rise and to gain more purchasing power versus other fiat currencies. And the reason that I like it most, the last two reasons are that it's recently dropped significantly. The price is recently halved. It's down 50%. I normally like to follow things that have got momentum, but in this case where I'm trying to keep money safe, I like the fact that it's halved. I like that it's maybe a 12 to 18 month play. There's an opportunity at a double, but the last reason is the company pays an 8% dividend. I can only get 4 or 5% in the bank. My debt on my home loan is like 6.5%. So I'm getting 8% to wait in Woodside, right? And if it does happen to double over the next couple of years, I can sell half, keep the other half for nothing, and continue to collect my 8%. There's another, and I'm not going to go into detail about it today, but for those who are a little bit more advanced, I would recommend looking into MicroStrategy a little bit more. They have a perpetual bond. It's under the ticker STRK. That pays 8%. And anytime that's trading at under $100, it's actually trading at a discount to what those bonds were issued. That's paying 8%. That's a place that I can keep my money parked as well. These are a little bit more high risk. I would never recommend everyone putting all their money into one thing. Not Bitcoin, not gold, not anything, because the world is changing so fast. But these are some of the things that I'm looking at the moment. And for sure, don't be considering bonds, because I think over the long term, bonds are going to get killed on a real basis. Everything that's happening, everything that we've discussed today leads me to believe that bonds are going to get absolutely killed. It's not to say they won't have periods where you can trade them. If bond yields in America go to 4.8, 5.2%, it's probably going to be a good trade, right? Because everything else is going to crash around it, and people are probably going to be forced to get into bonds as a trade. But over the long term, I think on a real basis, you're going to get killed. And then the last thing that I would look at is Bitcoin. Again, the caveat is if for some reason the Western worlds have a change of heart and they start doing Javier Milei style policies like in Argentina, I think the value of Bitcoin gets killed significantly, right? I think it drops significantly. But it doesn't look like that's happening at the moment. I'm not betting on that at the moment. The reality is with Bitcoin is it is a beneficiary of all the things that are happening at the moment. It was created based on all these things that are happening at the moment. It is a version of gold. It is a neutral reserve asset. Is it a place to store your wealth through these times? And it's so much more portable and divisible than gold. It's easier to transfer than gold. Are there risks? Yes, there are risks. But you're basically seeing an administration in the US that is pro-Bitcoin. They are saying it without saying it. Hey guys, start to accumulate some Bitcoin. You're starting to see companies in the US that are now switching their business. They're pivoting their business completely from whatever it is that they were doing to now being Bitcoin accumulation companies. This is a significant shift. It's a huge shift. And I'm going to throw up a chart that basically shows all of the world's capital. You can basically see the amount of money, the size of Bitcoin versus all these other areas, versus stocks, versus bonds, versus gold is so small. So the thing that has the ability to grow most exponentially, even if only a small percentage of capital in these vehicles, in these other savings vehicles, if only a small percentage of it moves to gold and Bitcoin, Bitcoin is going to see a more commensurate rise with that demand because the network is growing. The amount of people in the world that own property, the amount of people that own money that is in bonds, the amount of people that own gold is so much greater than Bitcoin at the moment. So Bitcoin is also going to benefit from the network effects of more people adopting this as a store of value. So in my opinion, it has the best asymmetric return of all the major asset classes. It has the best risk reward and the most asymmetric return of all the asset classes. And that's why it's currently one of my largest positions, and I will continue to acquire it. I've recently, I've got a business, an e-commerce business, and I'm trying to grow at the moment. But even if I can't grow it anymore, I'm going to keep it. I'm not going to sell it. And the reason that I'm going to keep it is because it spits out enough cash flow for me to take that excess. I don't even need to put that money back into my business. I can take that excess cash flow, the money that I don't need to live or to run the business, and I can put that into Bitcoin. And if I keep doing that over the next 10 years, I'm probably going to compound my money faster than what I could by starting new products, by what I could hiring new staff, by what I could trying to get into other verticals and other markets. So if you've got some cash flow and you can put that into Bitcoin, I think over time, you're going to do well. A lot of people ask about dollar cost averaging. I'm a fan of dollar cost averaging, but I'm not a fan of regularly dollar cost averaging. So I wouldn't put in like $10 a day. I wouldn't put in like $100 a month. I wouldn't put money into an account, into a bucket, put money into an account, and I would try and time my dollar cost average. The studies and the statistics show that you're going to do so much better with dollar cost averaging if you lump sum invest on massive corrections. So that's the kind of dollar cost averaging I will do. I will be putting money aside. I will be waiting for those 20, 30, 40, 60, 70% corrections, and I will be dollar cost averaging in at those moments. I think that is the best way to acquire, whether it be Bitcoin, gold, a company that you like, whether it be a dividend company, etc. So what are the vehicles that we spoke about again? There's gold, there's big tech, there's AI and productivity, picks and shovels plays, there's high yielding stocks, and there is Bitcoin. They are some of the things that I would be most doing your homework on in order to kind of play the survival game and not only survive, but thrive. Yeah, guys, don't fight this. Front run this. We are being given with technology, with crypto, with free trading basically in some aspects. It has never been this easy to front run the thing that is happening. The information about what is happening has never been so accessible. And if you don't believe me, go back and look after World War II. Stocks were not that popular. Stocks were not the number one investment vehicle. It was government bonds and treasuries. Stocks were only invested in by a small percentage of the population, kind of like crypto today. And all of a sudden, look how big they've become now. Things don't change. Human nature doesn't change. It always rhymes. It's the distribution mechanism. It's the technological vehicle that changes. You look at podcasting, for an example. It's a perfect example. It's pretty much talkback radio, right? Podcasting is pretty much talkback radio. So that our need to listen to someone sit here and spit it and talk to no one, right? To talk to a camera or to talk to a microphone hasn't changed. We just consume it in different formats. Our need to store our wealth in ways that aren't going to debase hasn't changed. There was seashells. There was, you go back and you read books like Broken Money. It talks about all the different ways that money was stored. There's obviously gold. There's been silver over time, which wasn't so effective. And now there's Bitcoin. It's another technology that's come along. So, I hope this has inspired you to kind of go down that rabbit hole. The winners are going to be the ones that own real assets, right? And I think it's not to say that I don't think you're not going to do well owning stocks or you're not going to do well owning property. I think in what's coming, with what's coming, everything is going to be going up. Everything is going to be forced to go up, right? But there are going to be some things that outperform. And when we get to the end of this, or when we get 10 years down the track, you're going to want to have invested in the thing that performed best, right? I can't tell you what that is. I think I know what it is. I think of all the things I've mentioned today, it can be Bitcoin. But that's not to say there's other companies that aren't going to outperform it. MicroStrategy's outperformed Bitcoin in the last 4 years. Nvidia's outperformed Bitcoin in the last 4 years. There's going to be other winners. It's incumbent on you to go out there and find out. But the simplest, easiest, most logical one to rise, I think things are lining up for it to be Bitcoin. Again, do your own research, not financial advice. Just go down that rabbit hole. Let's stop with all the doom porn. Let's stop with all the doom porn. Let's stop with all the complaining. Let's be a little bit more positive about the system and where it's at. And let's just try and be on the right side of history. Let's get clear on what we need to invest in to preserve our capital. You know, we talk about this all the time, right? You got people out there that are working 80 hours a week. And I sit here across from them and I tell them, hey, you're working 80 hours a week. It's like 2,000 hours a year or whatever it is. Don't you want to spend like 100, 150 hours trying to work out how to store that money that you're earning, that you're working so hard for? And people don't want to hear it. They just don't want to hear it. I don't know why. Maybe you can put in the comments why people don't want to hear it, but they do not want to hear it. Well, I think that's crazy. I think it's really crazy. I think you need, if it's not you, you need someone in your life that is guiding you on how to better store your time and energy in abstract form, because fiat money isn't going to be it. That is pretty much for certain, based on what we've seen. You can't beat the system, but you might as well profit from it. Okay. Anyway, guys, I've probably rambled on. Let me know if it's helped. Let me know if it's ramble. Let me know if there's things that you want to understand a little bit deeper. I'm open for next week's episode to take your questions, your ideas, your topics that you want to discuss. Throw them in the comments. Let's keep going on this journey together. Let's keep learning. Let's keep making the most of what is at our disposal, and let's win. Let's not be the ones that are on the losing side of this. And just remember, when in investing, if you are contrarian, it is the best place to be, because when things turn, you make the most money. When the ship starts to get too heavy on one side, that's when things start to revert, and that's when you want to be taking profits. So start to get comfortable being contrarian. Start to get comfortable being in the minority and being involved in these things that so few people actually understand. One other thing that I'm considering doing, and I want to know if you guys are interested in it or not, is I want to take $10,000 US or $10,000 Aussie. I want to put it into an account, and I want to start trading that real time for you guys so you can watch my moves. I'll put out quick flash updates if I make a move. But I want to try, the goal that I'm going to set myself is to take that 10,000 Aussie or US and turn it into 100,000. I want to try and 10x it. I want to do it live for you. I want to show you the things that I'm looking at. I want to show you the vehicles that I'm using to try and trade that and get the most bang for buck. And like I said, I will try and put out live updates when I make a move. They won't be exactly live. They might be like, a few hours after I've made the trade. It's not an invitation to kind of copy those trades, because you don't know when I'm going to be trading in and out of things. I'm going to be trying to take that money, trade it in. I think the signal is going to be the most important thing. If I'm taking that money that I'm doing in front of all you guys, I'm not going to want to lose, because it's going to hurt to lose. It's not going to look bad, although I'd probably get more engagement if I do lose. But I'm going to want to take that money and continue to compound it. So I'm going to trade in and out of things. And I'm hoping that what that does is kind of show you a signal at the things that I'm most bullish in at the time. And maybe then you can go doing your own research and work out, why is he bullish on these things? Is this something that I should be looking at? So let me know if that's something you're interested in doing. Put it in the comments. Yes, we want to see this challenge, and I'll set that up and I'll post all the trades, etc. Maybe there'll be an email update whenever I make a trade as well. So I might get you guys to subscribe at my website. You can leave your details. You're on my mailing list, and then when I make changes to that trade, or when I make updates, you guys can see it there, and I'll email it directly out to you, because you might not always be able to catch the live updates, or you might not always be on YouTube. So if you think it's a good idea, I'd love to start doing it in the next couple of weeks or so. Put it in the comments, let me know, and we'll get that going. It'll be a bit of fun. All right, guys, that's it for today. I will see you next week on Money, Markets, and Mayhem. Take it easy.